if your daily account is at a neobank that you're relying on, stop.
Right.
Transfer, get out, have your daily out. There are great neobanks out there that truly do the right thing. But in general, there's going to be many, many of them that are not going to exist.
Good morning.
Good morning. How are you?
Pretty good. Back with another episode of Expandable. I have this question for you. So I think a lot of like young business entrepreneurs, especially, come to mind when I think about this, but also more seasoned that get hit with promotions and they see the new fandangle thing that comes out for in terms of banking. There's a lot of neobanks that are a lot of, like, we talked about this a lot in the past. There are a lot of skin, like they're kind of veneer, and then there's not a lot of substance behind them. But I was curious, is if I had my business running and I chose to use a neobank to put my funds with them because I was allured by their, sexy marketing or whatever.
Yeah. The promotions are getting your money early, or
like the way the card looks, or whatever.
Yeah, the user interface.
Right. I'm drawn to that, and I started banking with them. Is my money protected? Because this question is like, I started thinking, okay, well, this is great, and this all sounds good, and it kind of feels good, but when I'm with a regular bank, I kind of know it's FDIC insured, and these things are in the back of my mind. With these type of banks, how does that work?
Okay. Yes. So you can have a neobank that is not the bank charter that offers banking like accounts, and they're typically sponsored by another bank.
Right.
So they're allowed to have FDIC pass-through insurance, but that insures the actual bank.
Meaning the bank that's got the charter has the FDIC, it passes through to the neobank.
So if you're dealing with a neobank that is advertising FDIC insurance, if their charter bank goes under, those individual ledgers of that passes through. So if you had less than, $250,000, if that bank went under, you would be made whole throughout the insurance, because if there was $100 million in an account at that big bank that the neobank was managing, that was the average size was, $50,000, right? That'd be insured.
And just to stop there for a second, because you and I understand this, Dante Clay's over it. The neobanks are not chartered banks. That's why they need a bank that has a charter, an actual bank.
Correct. They can't process through the Federal Reserve.
Process everything.
They need sponsorships.
So every neobank you see has to be attached to an actual bank.
They're dependent on the traditional banking system.
Correct.
100% dependent on them. They have to have a relationship with a bank in order to exist. Deal. Correct. So what is going on now with, you got to look up Evolve Bank and Trust. They had several deals. So not only what happened was the neobank also passed through a middleware that then passed through the bank. So if it was, 100,000 accounts, the bank only saw the aggregate of all of the money. So we would pass through those hundreds of thousands of accounts. So the neobank would keep daily records of what is owed to their customers. Individually. Correct.
But then the bank
only sees one account large.
That could be a problem.
So exactly. And so what's happened is, so in the bank's eye, they're thinking, what's great. We've got all these deposits and we don't have to deal with the hundreds of thousands of customers.
Right.
And, we just have this relationship. They made the deposits for us and we did, it was presumably a lot less costly than us growing our deposit base another way.
Right. Yeah.
And, so you assume they would go through all their risk assessments and everything and say, what happens in the worst case? Well, in this situation, what happened is money ran out at those fintechs, and the middleware and relationships got soured. So they went under. And so there's no one performing the access of the task. And so then all the people that have accounts there are like, I need access to my money. Well, their fintechs that went through this middleware to this bank, there's nobody to do that at the middleware. That's bankrupt companies.
Gotcha.
So the money's tied up at the Bank Evolve, and they don't have the records of every individual account to even disperse the money. But they do know it's short between $65 and $95 million.
Yikes.
because what was happening is the bank knowingly knew that though their large account wasn't reconciled daily to the fintech, aggregation of their accounts. Nice. So if they were saying, we are holding
that's a problem
today $957,012 for our, 50,000 customers,
right,
then that should show up in the bank account.
Yeah.
Now those never will match perfectly because there's always items in transit.
Sure.
And banks know that. We've been dealing with that for years.
Yeah.
Just because we gave you credit to that check you deposited today,
doesn't mean
we have that in our Fed account yet. That waits to the next day.
Mm-hmm.
So, and reconcile, there's things in process. That's why you do it daily and you see the movement of things with debit card files.
Right.
So they clearly used customers' funds. Why is it short 65 to 95 million? They used that.
They started acting like
using it in another way
without permission.
Yeah.
Or with permission of their board or whatever, but it wasn't translated.
They were using it. Typically in that situation, they're not allowed to touch that for benefit of, for anything else for the customers.
Right.
But clearly they did because it's short.
Yeah.
Not what they used it for. So then everybody's out. So now, of course, people are going to the government, hey, your fault. And we're like, we insure the bank. The bank's not under. So, I mean, we don't have a dog in this fight. But then you've got, Congress and senators saying, no, this could be exasperated and be worse. Mm-hmm. And so now there's a push, and the FDIC just put out a rulemaking yesterday, and it's titled, and really it's because of this debacle. And I can't this is one of the first times I can't disagree with them. And they have a notice of proposed rate, the requirements for custodial deposits, accounts with transactional features, and prompt payment of deposit insurance to depositors. So no layman's going to understand what that means.
No.
But what that means is every bank, in theory, is going to have daily reconciliation of their relationships with any neobank.
Okay.
They're going to have to match daily.
Okay.
That's going to create a lot of extra work. And it's not going to happen for most of them. So you're going to have a lot of banks saying, you know what, our agreement's out. We're sending you through the door.
It's not what we signed up for.
So I would not, if your daily account is at a neobank that you're relying on, stop.
Right.
Transfer, get out, have your daily out. There are great neobanks out there that truly do the right thing. Mm-hmm. But in general, there's going to be many, many of them that are not going to exist if this rulemaking goes into effect.
Yeah.
And I've seen it firsthand. Majority of the fintechs really don't even know how to reconcile. And that's been hugely apparent in the industry. Yeah. Majority of them, they have no idea. They have no accounting background. They think that they have a great front-end user experience. Mm-hmm. But behind the scenes, they have no clue. Mm-hmm. They don't know that, they don't know how to process debit card chargebacks. They don't know the process of the fees associated and interchange. And I'm sure they're commingling accounts and everything.
Yeah, intentionally or unintentionally.
Correct. Yeah. They went in this, we know how to do it better than the bankers. And then and it's a mess. It's really, all parties are at fault. Mm-hmm. But it's the bank should have that. And earlier on, that when we've experienced with Bass, I saw this many years, 5 years ago. The fintechs, there's some really great ones out there, but for the vast majority of them, they do not know what they're doing whatsoever.
Yeah, because it's just a fire that's been lit, and everybody wants to after it.
Correct.
And investors want after it.
Idealistic. We're going to change the world. We're going to have this front, but really, they didn't offer anything.
There was nothing really new.
No. I mean, what is everything new in the past 5 years? I mean, in my life and everything, you spend typically cash, credit card, debit card.
Yeah, it's a pretty simple.
What has changed and have access? Right. If you have money in your account,
right. So then what happens?
There's no issue.
The thing that I'm curious about is what happens with this kind of singular account that they're reconciling every day versus knowing the individual accounts or knowing the individuals, talking about the chartered bank to the fintech. What happens now? Are they going to have to go to singular reconciled accounts, or are they still going to have one omnibus account?
No, I mean, there's ways to sync the process. They're just going to have to upstaff and have, daily alerts and building processes and systems, and having, their files daily on SFTP server, and then you run the risk and back and forth and see their reconcile. But it's in the rulemaking, I think they say daily reconciling. That's just, they're not going to, the bank and them are not going to reconcile daily. It's just not going to happen.
Yeah.
You audit by exceptions in order to really scale it. So, both of them have to do their own reconciliations and match daily.
That's
of what is in process.
That is.
And, you can automate systems there, but it does also involve, human intervention because,
so there's more cost, and the real risk has been brought to light. So, or more of the real risk, because there's probably still more that's not been brought to light.
Absolutely.
They made these bad deals.
And it's unfortunate because there's a lot for benefit of companies in the payment space that you don't know. Maybe they aggregate, the bill payers.
Yeah.
There's a lot of those. So the FBO accounts are necessary in the banking industry because, and for consumers, they are necessary. But when you take advantage
what's
of
an FBO
for
again?
Benefit of, I'm sorry.
Okay. All right.
For benefit of. So you could have a bill payment company that is saying, your car payment's $500 a week, or $500 a month. You get paid twice a week. We charge you, I don't know, X amount, pool $250 every 2 weeks. Well, they're holding that money in between the 2 weeks of making your payment.
Yeah.
If they got tens
sort
of
of like
thousands.
an escrow.
Yeah. So if you've got hundreds of thousands of customers, you're only holding their money for 15 days until you make the payment.
Yeah.
Typically. But that would be for benefit of, and have, they would have to keep ledgers and know that they're holding that money for that customer to pay.
Right.
And there's a lot of really good companies out there that know how to do that and reconcile.
Yeah.
They just didn't take that. Why they didn't take that same technology over to BaaS blows my mind, because
banking as a service.
We were doing that 4 years ago, we stopped it immediately because of that issue. We didn't let it grow past $6,000 in deposits because we noticed that was an issue. Yeah. And it just wasn't front of mind.
So you learned this firsthand.
You just don't let it grow out. And so if you can't, so from the get-go, you test things. Yeah. If you can't reconcile 15 accounts, you're not going to reconcile a million.
No. Yeah.
And that's it. So you have to get that process down in the beginning on few. But everyone wants to go from 3 to a million.
Yeah, they want to scale because that's how the investors want them to do. Yeah.
But you have to stop and have time to look into there, because it takes months for you to really see the bills and charges and everything. They've never been in the banking system. So there's costs associated with what they're doing. Yeah. And, right from the get-go, we saw the first week, it was like, no, you can't put the whole card file, because if you're issuing debit cards, that's a net settlement every day that you get from the card network. So you could have, a million going this way, a million going that way, and you get zero, but then you need to know how that crosses into your accounts, so that's why you manage by exceptions.
Well, that's a fantastic breakdown. And I think most business owners didn't know any of that or how any of it works, myself included. If I'm one of those business owners that is banking with a neobank, fintech,
or your personal account with them,
what should I be scared and pull my money and go back to a regular bank?
I wouldn't. I would not. Yes, because it's imminent. Something's going to happen. Regardless, there's 100% going to be more regulations
because the average business owner consumer can't go to their XYZ charter bank that's chartering. They might not even be able to find it, who's chartering the fintech, and then see what the procedures are. That's just too much work, and you probably won't be able to find it out. So the unknown there presents a risk.
Correct. And what has always boggled my mind in the last 5 years is how these neobanks, their valuations would be 100 times fake earnings. And, because you're an X, when it was like, are you kidding me? How are they times that earnings when they're solely dependent on relationship with a bank? Yeah. So but yet that bank that has that earnings that has tangible equity, in banks, we have to have equity. there's no rule over the fintechs or the equity.
Yeah.
I think burning through money owned by a private equity firm that is, burying that loss and just having year over year, losses, hoping that, they're going to sell the data because, so many of them get out there that they want the data like it's useless. Well, now it's old data, or now it's not the data that people want in today's time,
Right.
So, data changes too.
Yeah. Especially if you're not reconciling daily.
Yeah, so nobody can trust your damn data anyways. So yes, that's what's going on.
Yeah, so that's what you'd recommend people doing is looking for an actual bank. So
yeah,
you're going to the source,
but take a look at it. There are a lot of neobanks that really are at that bank, that the bank is 100% owned, doing an access to.
Yeah, the bank has their own sort of.
Yeah,
fintech.
so if you've got that, dude, I don't want some, then that bank's doing it right.
Yeah.
So just, if this is concerned, you look at the relationship, ask them.
Yeah.
See, there's disclosures at the bottom that shows who the relationship of the banks, and they have to.
Yeah.
And that's an issue too. If they don't even see that in disclosures, then you need to damn run.
Yeah. Big red flag.
Correct. But there are a lot of neobanks that are 100% owned by that bank. So they're already doing that. They wouldn't be considered that BaaS. It's just a different community they're trying to hit and market to.
Yeah.
So
niche, yeah.
Yeah.
Which, that makes a lot more sense to me than just starting up something for the sake of, showing fake numbers and getting scale.
Oh, yeah.
So, yeah.
No, I applaud the banks that are doing that. That is the right way, and that's the way it should be.
Mm-hmm.
In a way. But, if you're a bank and you spend all that time for that bank charter, you can't just give it away and give it to somebody else to then be the maker of your destiny. Like, the banks, that is risk. And the fact that they gave it away, but, nothing. But, you've seen businesses, still the percentage of banks fail is still, a million times a lot smaller than, businesses. So, they have to have good equity.
Yeah, that's because they're so tightly regulated.
It's one of the most regulated industry there is.
They have to be accountable to what they do.
Yeah.
Okay, great. That's awesome. Thanks for that. I think that's going to benefit a lot of business owners.
All right.
Cool.